In this video, we're going to take a look at some basics about fundamental analysis when looking for stocks to invest in. Now, fundamental analysis should be one of the first steps that you take before purchasing any stock in any company. If you are planning on investing for the long term, if you have a long time horizon, if you are planning on putting this stock into whether it be a regular brokerage account, whether it's in a 401k, a 403b, an IRA, or any sort of investment account, you're planning on holding it long term, then fundamental analysis is a key step. And I recommend that if you're going to invest in equities, that you at least do a little bit of fundamental analysis. So we're going to look at a couple of examples so that you can see what some of the important things are to look for. So I'm going to go to Yahoo Finance. This is a free website. It will have all of the information that you need to do a basic assessment of the fundamentals of any given company. So we're going to start with a company that everybody is very familiar with, and that's Apple. So you can search by ticker symbol. So AAPL is Apple's ticker symbol, or if you put in the company, it'll pop up for you. So we're going to click on Apple to start with. All right. So some information will pop up on the screen. This is what it would look like. You'll see a chart, a daily chart. You can obviously look at charts for different days if you want to. I don't recommend looking at the chart because you can't really tinker with this chart in the same way that you can on other platforms. Like I use TradingView. You can have a free TradingView account, or you can get one of the lower level subscriptions so that you can unlock some of the features. But I use Yahoo Finance for individual companies for fundamental analysis. So there's a couple of things that you can see over here on the left side of the screen. If you follow my mouse, it'll show you previous close, the opening price, some things like that. It's volume. A lot of people pay attention to volume. Unless you're trading, that's not really as important at this point. Market cap, Apple is, I think, the only company, at least at this point here in early March 2021, that has a market cap of over 2 trillion. It's pretty amazing. Some things that people look at right away, something that you can find on this summary page here, is the PE ratio. Now, PE is not everything. And what I want to take a moment here to emphasize is that, like any single thing that I point out in this video, PE and everything else, you cannot take it as just the only thing. You have to put a series of different bits of information together in order to make a true assessment of the company. And I would say that's true in any aspect of investing. You don't want to just go off of one piece of evidence, one little story. You want to try to put as many things together to corroborate what it is that you are about to invest in. So you have your PE ratio, trailing 12 months, 32.83. What this means is that its price in comparison to its earnings is on a multiple of 32. So you can see their earnings per share are $3.69, $3.69 per share. That's their earnings, right? So how do they figure this out? The stock price for today, it closed at $121.03. And so since they earned $3.69 per share, when you do the math on that, that means that the total price to earnings ratio is 32.83. Now that is one metric, and I will say this: the higher that number, the more overvalued a stock is. And I don't recommend, and again, you have to string a couple of these bits of information together, but I don't recommend buying companies that have extremely high PEs. Like this, I think this is okay. I think this is about at the furthest end of what to me is reasonable. Now, are there circumstances in which you would buy a company if the PE ratio is really, really high, much higher than this? Sure. I can think of situations where that might happen. Okay, but more than often than not, a good PE ratio is between 15 and 30, I would say, maybe even on the lower end of that. But what you want to be careful about is if the PE is very, very low, like 10 or under, then it's possible something is wrong. So that's something you want to look out for. You know if you're generally at fair value or at or near fair value for your stock if it's under 30 and maybe above 15. That's usually fairly priced. Another thing that you could see on this page is the forward dividend and yield, right? So the reason I look at this is because when I am long-term investing, I want to invest in strong companies that pay dividends, especially if you're going to put this in a tax-deferred account, a retirement account, or something like that. If you're planning on holding it for a long time, you want something that pays a dividend, all right? And so this is what this means is that they pay 0.67% every quarter on their dividend. Okay, so that's is it good? Is it bad? It just depends. What you don't want to do is you never want to chase high dividends. So even if this percentage was really high, that doesn't mean that it's a good company, right? And the thing with dividends to understand is the dividends they won't always be there, especially if the company is doing poorly or has a poor business model. Now, how do you know if that's the case? Because this information is very basic. It doesn't really tell you about the underlying fundamentals. Where do you go for that? So on Yahoo Finance, what I do is I come right here to where Financials is, if you see at the top center of the screen. Click Financials, and it will take you to this page. And what's really cool is they break down this information based on the income statement, the balance sheet, and the cash flow. And I'll show you what you should look for. So first of all, I'm going to immediately come right here and click where it says quarterly. Okay, because I want to know quarterly. I think that's the best information that you can go with at this point. So one thing to look at is the total revenue. I guess what you would want to see is that over time revenue is increasing. And so here with Apple, you can see even going back, you have most recently the quarter ending December 31st. You have these numbers in thousands. So what is this? $111 billion, 64. That's an improvement over $64 billion. The previous quarter, which is above $59 billion, previous quarter and 58. So you can see it's accelerating pretty highly. So that's good, but that's also not the most important thing. Again, on its own, it doesn't really say a whole lot. There's all this information on these pages. A lot of people look at EBITDA. It just depends on how in-depth you want to get. But I still don't think that that's necessarily the most important thing. For revenue, you just want to see that revenues are increasing. Okay, then the next thing that you would want to look at is if you click balance sheet instead of income statement, you want to be on balance sheet. All right. So one thing you want to look at is their debt. Right. So you have total debt and net debt. And this has to do with their assets versus their liabilities. All right, so net debt is where I'm going to be looking at. Total debt also kind of important, but I pay more attention to the net debt. And what's really cool is you can see here that in the last couple of quarters, their debt has fallen considerably. That's a good sign. The lower the debt, the better. Probably one of the biggest problems that companies face is if they're highly levered and lots of debt. And then we have a crisis, say, like we did back at the end of February and into March of 2020. In recessions, in bear markets and things like that, highly levered companies, if they don't have good cash flow, good business model, if their market cap isn't very high and their debt is relatively high in comparison, those companies tend to go bankrupt. Those companies tend to cut their dividend in order to pay their debt down. So that's important to see that the debt is coming down. Even in the total debt, you can see that their debt is coming down. But then one of my favorite things to look for is when you come right here to cash flow. All right, cash flow, what you can do is go all the way down to the bottom here where it says free cash flow. Apple has, I don't know what's going on with my computer here. Apple has $71 billion in free cash flow. That's amazing, right? And you can see that it has, a couple quarters ago it was at about 50 billion, 64 billion, 58 billion, 73 billion. So it's been increasing in its cash flow, and this is good. This means that they have plenty of money to pay their dividend. This means that they're in a good place where they have a lot of cash to use to potentially buy assets, to invest in their own company, and so on. So that's really good. So this is, obviously we all know Apple, but this would be a company where I would say, yeah, that's really good. I think this is worthy of investing. And then if you think that it's a company that's worth investing in, then the next step would be to do technical analysis to find a good entry point for buying the stock. All right, so that's one example that we can look at. Now let's take a look at a different example, and I'm going to choose BA, Boeing, for this example. Now, Boeing has gone through some hard times ever since the MAX 737 issue started a few years back. And that's important. That's something that you want to keep in mind as you're doing any sort of fundamental analysis and as you're considering a company. What's going on in their company? Are they going through lawsuits? Are they experiencing decline? What's the overall macroeconomic picture? So, for example, Boeing produces airplanes, among many other things, but they produce airplanes. And what has happened in the last year is that airplane travel has declined. And so there are fewer orders for newer planes. You also have the MAX 737 issue. Boeing's been having some problems. And so that's important to understand to understand the background of the company. So a couple of things to notice. Their PE ratio on their trailing 12 months, right now it's showing is not available. That's not a good sign, right? You don't want to see that. You want that information to be present. And again, PE is not the most important thing in the world, but it's helpful. It can help. It adds another piece of data in your evaluation. Look at their earnings per share. They're going to, on their trailing 12 months, they're losing $20.88 per share. And that's pretty incredible considering that the share price is at $269.19 right now. And even if you just pull back 1 year on this chart, there was a point where we dipped down into under 100. It's pretty incredible. And then you see also there's no dividend. One of the things Boeing did in lieu of the crisis, or because of the crisis last year, was they nixed their dividend. So they don't pay a dividend either. So already when I look at this company, I'm thinking, okay, it's not something that I'm interested in for my taxable account. It's not something that I think I really want to hold on to. But, maybe you think, because, if you go back to a 5-year here, at one time, Boeing was trading at $439. So maybe you think, oh, well, Boeing's got to come up again. So maybe there's a part of you that's thinking, okay, I'm going to buy now because if it comes back up, even into the mid 300s, I'm going to make a considerable profit. Now, I will say this, just because a company came up once before to a certain level does not guarantee that it's going to come up again to that same level. Okay, but let's just take a gander at the financials here. So we're going to see the revenue. If you look here, their revenue has been declining the last few quarters. Oh, I'm sorry, this is annual. Let's take a look at annual just because. So this will actually provide a bigger picture. Year over year, the last couple of years, revenue has been steadily declining. And obviously you can make the case that part of that has to do with the 737 MAX. And part of it has to do with COVID. That's a pretty big drop. See, from December 31st at the end of 2018 to the end of 2019, their revenue dropped pretty considerably. It looks like about 30%. And that's a pretty big deal, and you saw that it had gone up from the previous year. So something happened, and obviously that is the 737 MAX issue started to become a considerable deal, and then obviously the COVID crisis. So, but let's take a look at quarterly. Let's just take a look at that for now. Okay, you see that at the end of March of 2020, it was around 16 billion, and then it took a huge drop. Bottom dropped out of the market, so the June quarter was awful, and it's been on a slow rise ever since. So their revenue is coming back up in spite of the crisis. Okay, so that's promising to some degree. Okay, let's take a look at their balance sheet. Look at their debt. Their debt appears to be increasing, not just their total debt overall, their net debt. Look at this jump. 2 billion to 6 billion to 17 billion to 55 billion over the last few years, and over the last few quarters. It has also been increasing pretty significantly, right? That to me is a problem. Now, because of the crisis, I know the airlines and companies like Boeing have been getting bailouts, but this increasing debt is a problem. It's risky. It's not something I'm interested in. Let's take a look at the cash flow really quick. We could take a look at this here. Make sure I'm on quarterly. Right, so you look at their free cash flow, negative free cash flow, and that has been getting worse ever since then. So they're burning through money. So looking at all this should tell you right away that this is not a company that, fundamentally speaking, is worthy of investing in, unless if you really believe that Boeing has a long-term future, by all means, go for it. But I would not select that company because of those fundamentals. And then obviously, like I said, if you look at a chart, at least in the more recent history, it doesn't look good. So this is that's an example of a very strong company and then a company that's really struggling. So obviously in this situation, I would choose to buy Apple, but I would not choose to buy Boeing if I was looking for a stock to put in my portfolio. So I hope you enjoyed this little how-to. Again, there's so much more information that you could look at, but those are some of the basics that you look at that I think you should look at when looking to invest in a particular company. And then, as I said earlier, once you get through the fundamental analysis, then the next step would be technical analysis to find the entry point. So go ahead and like and subscribe to the channel if you thought this was interesting. Share it with somebody if you think it will help them. Thank you for watching. See you next time.